As you guys already know, MT5 has gone rogue. After much consideration, I finally made the decision. I'm done with Forex. I'm completely switching to futures. In this video, I'm going to get into some pros and cons for the reason why I am leaving Forex and making the complete transition into just trading futures. I hope you get the value that I'm giving you from this video and make the decision for yourself whether you're sticking with Forex or you're switching to futures with your boy. So let's start the video. As stated in the title, you guys know I'm leaving Forex for good. As much as I love Forex, our time has come to an end. With the rise of regulation in the Forex space, it has caused us to lose our access to MetaTrader platforms, which is giving us great distress because it's all we ever known. As Forex traders, MT5 has been goated. It's the king of Forex trading. When I first came into trading 3.5, 4 years ago, MT5 is what I knew. I've been trading on MT5 for 3 straight years until 2024 when I fully lost access to MT5. So yes, the pain is there for all of us. We don't want to lose our baby, our prized possession. MT5 was everything for us. We loved it. Who wants to lose MT5? But it's gone and our hearts are broken. Yes, but it is time to move on. With one door closed, another one opens. Now it's time for futures. Let's start with the pros of trading futures compared to Forex. Number 1, regulation. Forex was not regulated. We all kind of knew that. Forex had crazy leverage, 1 to 1,000, 1 to 1 million, sometimes unlimited leverage. And they were caused by brokers that was offshores and kind of skeptical, kind of sketchy. Some people didn't get payouts. Some people didn't get their money back. When these brokers went down, we all went down with them. So regulations is in futures, and I'm happy to say I actually like it. Futures has made me now comfortable to know that I'm safe here because it's US backed. Although we know that not all regulation is safe, but more regulation is not that bad compared to no regulation. Number 2, we can trade on TradingView. As you guys all know, we probably all did the same thing. From looking at our TradingView charts and placing our trades on MT5 or MT4 platforms. We used to have to toggle back and forth from our phones and our laptops, or just from our screens, just flipping back and forth to see the analysis from TradingView to MT5. But now we just have it one straight place. Futures, we can all just do it on TradingView. We can open and close trades from TradingView, mark up our charts, and execute. And I love it. Why? I love it because now I don't have to flip through charts, right? It made my trading much simpler, made it much easier. And I have the comfortability to know that all of my trades are right in front of me. I'm not missing out on no action. Number 3, we all are seeing similar or the same charts. Before with Forex, we had different data feeds, right? If I was trading with one company and my friend was trading with another company, we were seeing different price actions, with price being repriced, or it's being off by a couple, or maybe the candles shot up a little higher on his chart than mine, or whatever the case is. We didn't usually see eye to eye on the same charts, but now with futures, we all see the same thing or similar thing. We're all looking at the same charts, so our analyses are usually closer and more different. So I'm happy to say I like that too. Number 4, no spreads. Spreads was a killer in Forex. Man, I used to get wicked out just because of spreads. My trades will come close to stop loss and then it will take me out just on spreads. It didn't really hit my stop loss just because it maybe have been more volatile. It would take me out on the spreads. And I hated that because my trade was still valid. It's just spreads got me out. And me as a day trader slash scalper, it's important that my trades do not get taken out by spreads because my stop losses aren't that big. Now, I know my trades are safer in the market because spreads won't take me out. Number 5, the challenges are cheaper. If you're taking prop or the prop route, the price for prop challenges are cheaper across the board. Although you still have to pay an activation fee to take the challenge, it's much cheaper. It can range from a couple dollars to maybe $100, $200. Usually on Forex, these challenges were 500, 1,000, 2,000, and if you failed it, that's it, your money's gone. But now you could take the same challenge and pay less, a fraction of the cost of what we used to pay on Forex. Which leads me to number 6, one-step challenges. Although they do have some companies that are two-step, but one-step challenges are amazing. I love one-step challenges because the two-step challenges were a bit annoying. Why? Because you would have to make 10% and then you have to make 5%. With futures, it's only one target. Usually it's 6% of whatever account that you're trading. Some have different rules, but most of them are 6%. And once you hit that target, you pass the challenge. Let's talk about some cons to trading futures. Number 1 con for trading futures for me is the platforms. Now you have to learn over the platforms. Although I already use TradingView, I didn't trade on TradingView. So now I have to learn how to execute and manage trades on TradingView. It hasn't been that hard, but it's been a little learning curve, and I expect that you have gone through the same thing, or you will go through the same thing. Number 2, the contract sizing. Whatever you're trading, they have a contract, because futures is basically you're trading contracts, and you must know the size of the contract that you're trading because they affect your trades. With the new contract sizings comes the new understanding of how to risk manage better, because on some pairs, the contracts are heavier than others. So you need to know how to place your trades with the reasonable amount of contract size, because you don't want to blow your account just because you didn't understand a contract size or you placed the same trade with a different contract. So it's important to know the contract sizing so you can understand how to risk manage better on whatever pair or indices that you're trading or commodities. Number 3, there are more fees allocated to futures. There are broker fees, there are exchange fees, there are add-on fees like real-time data feeds, and so much more different fees that are associated with futures. This I didn't experience with Forex. Obviously, Forex is unregulated, so there were certain things that you didn't have to pay for. They just gave you the data and you just took it. Whether with A book or B book, just accepted the data. You didn't have to pay nothing else. You place your trades and you went about your day. On futures, you have to pay some of these fees in order to get real-time data or to see things that you wouldn't normally pay in Forex. You have to pay in futures. Number 4, the rules are different for prop trading companies. Yes, the rules are different. Some prop trading companies have a balance-based drawdown and some of them have an equity-based drawdown. Some of them are just weird, and usually the drawdown is a lot less than what it was on Forex. Usually you have like a 2% drawdown of your account and then you lose it. Compared to Forex, you would have a 10, 12, 8, whatever percent drawdown, which would give you more cushion to be able to trade. Number 5, to piggyback off of the last one, with the drawdown, you cannot be as risky, but it's also a good thing because it makes you be a better trader and not just take risky, oversized, over-leveraged trades just to pass the challenge in one phase or one trade and just to reach the payout as fast as possible. You have to take your time to pass these challenges, but at the same time, it's a downfall for futures because you don't get the wiggle room or the leverage to place the trades as much as you want to or as big as you want to. It kind of takes a freedom away from you, but it's okay because it's making us better traders in the end.